Delta Airlines says it's going to spend $1 billion over the next 3 years to upgrade lounges and install more flatbed seating on its planes, all in the hope of luring more business travelers. Now, Delta's traffic fell more than 8% in December, the most of the major U.S. airlines, prompting my next guest to reduce her fourth quarter outlook from a profit to a loss, also looks for a wider loss for the year. Helane Becker, one of the top-rated airline analysts on Wall Street, according to Bloomberg data, also with Jesup and Lamont Securities. Helane, good to have you with us. Thanks so much for coming in. So what is the deal with Delta Airlines spending $1 billion? Is that really going to lure business travelers back?
Well, I think they need to spend the money just to catch up to what the peer group is doing. You know, everybody else has kind of already gone to the lie-flat seats. Everybody else is shifting out aircraft, and they've already got 1,400 planes between them and the merger with Northwest Airlines. They wound up with so many aircraft, so they have a real opportunity to reinvest in the fleet in a fairly cost-effective manner.
Do they think it makes sense to be spending $1 billion over 3 years when you take a look at the condition of the balance sheet, though?
Yeah, that's kind of a toughie, right, for them, but it needs to be done. It's either do it this way or go out and order new aircraft, and the balance sheet would deteriorate significantly more under that scenario than under this scenario, and I think they should be able to finance some of it. I mean, they're not, what do they have, $12 billion of debt. They think they can pay that down over the next couple of years. They should have been cash flow positive in the fourth quarter. So the operating certificate with Northwest Airlines, now they're on one certificate, so all the Northwest flight numbers disappear. They can really start to work through some of those synergies when they start to put everybody on one platform, which should happen in the next schedule change, which is, I think, around May time frame. And
you still like the shares of the stock? You still got, what, an $18 price target on the shares of DAL?
Yeah, basically we think the stock can sell at 10 times estimated 2010 earnings, when we've got a $1.80 outlook, so that kind of gets you to the $18. So yeah, I think that we can see a turnaround. Remember, at one point last year, we were thinking that this year, if everything went right for them, they could be in the $3 a share range. And this
is for a stock that's trading $13.33 on the close today.
Exactly, and it's come up quite a bit. I mean, at one point last year, it was trading around 3. So, it came from maybe we have to refile, or maybe investors thought they would have to refile again, to right now we're at 13 and change. People think that things are turning around, stabilizing in the group. Business traffic is starting to come back. We're definitely seeing more people being encouraged to fly again. We're seeing some travelers being allowed back in the front of the plane, which last year was virtually taboo. You did not see anybody flying unless it was on an upgrade. So we're getting people to pay for it again. So maybe
some paying travelers.
Yeah, that would be good for the industry, wouldn't it?
What about the maintenance costs? Because as they bring capacity back on some level, or from aircraft that may have been furloughed or that they've cut capacity, if they see any kind of increase, do maintenance costs increase for Delta, for example?
Well, so yes, in a word, that would happen. In their case, though, with all these aircraft, merging the two airlines, they really have an opportunity to kind of just take the best of the aircraft, and then so they wouldn't be hit as hard with maintenance as maybe some other airlines would be if they start to bring aircraft back on. But we're thinking headwinds for the group here in the first quarter are going to be higher fuel costs, because as you know, a year ago oil was $37, $40 a barrel, and now it's 75, 80.
Right.
So that's a huge headwind. The fact that the industry is doing less flying means there's fewer flights to spread facility costs over, and that's a fixed fee, so airport landing charges are going up. Maintenance, you just talked about that, so that's definitely an issue. And then labor. Delta's in a very unique position because they have no labor contracts due for negotiation until the end of next year, whereas most of the peer group, American, United, Continental, are all in labor negotiations now. So we're going to see, a pretty tough year on the labor side. All
right, but still a buy rating right now on Delta, and that $18 target, even given these headwinds.
Yeah, well, from 13 and change to 18, so we still have $4.50, and that's about 25% move upside. So I think that's a good risk-reward ratio.
All right, let's turn our attention now to what's going on at Continental, symbol CAL. They just changed their frequent flyer alignment. Is that going to change any fortune for the company?
Well, they think the hookup with Star, which happened, I guess, the end of October, and Star is kind of led by United and Lufthansa. They think that hookup will be better for them than the hookup with SkyTeam, and according to their president last week on the conference call, they did say that they were carrying 85% as much passengers through Frankfurt as they were carrying Amsterdam and Paris combined. So they think they're getting a benefit already from the shift. And I noticed that with the frequent flyer program, they've kind of matched the United program. They've kind of, it looks like they've taken the best of both carriers' frequent flyer programs to offer frequent flyers the best option.
All right, and so right now the best price for the stock you think is 22, stock closing at 19 and change today. What about the new CEO at Continental? Anything we can expect there?
Yeah, you know, more of the same. I think he came in when Larry took over from Gordon, and Continental has done a really good job over the years of succession planning. You know, there's very good depth of management. They've got a good bench. I think, you know, Jeff is well respected among the employees, and the guy took, you know, a pay cut to zero. He basically said he wouldn't get paid unless the airline was profitable. And, you know, again, they're negotiating with pilots for a new contract. So, you know, he's saying to the employees, look, you know, I think we can turn this company around. I think we can be profitable, and I'm willing to put my money where my mouth is and rely on you guys to help me turn this thing around. So, you know, let's get it together. I think that was not a bad way to start out his tenure.
All right, and we're going to still have to look at what happens to the stock price. $22 is the target. Continental Airlines today, $19.97 on the close. Helane Becker, Jesup Lamont, thanks very much for your insight.
Tim.